Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. So as we look at the week that was, we can see that all three of the major indexes, the Dow Jones, the Nasdaq, and the S&P 500, all rose for this week. And of course, we are up for 2012. This definitely was a positive week. The S&P made a modest 2% gain. We had 4 straight gains this week. Remember, the market was closed on Monday for the MLK holiday. And we have reached our highest closing level since the summer. As far as overseas news, we had a couple things. I think the most impactful thing was that the World Bank lowered its global growth forecast to 2.5% for 2012. China had some positive news with its fourth quarter GDP. And then some more information from whether or not the IMF is going to provide some more liquidity for the euro. With regards to our corporate news, of course, we're into our earnings swing here. Google disappointed, down over $50. IBM did better than expected. Intel did better than expected. Goldman Sachs did better than expected. GE did better than expected. So there are a lot of companies reporting, and we have some coming out next week also. And there really wasn't anything really impactful on the economic front. Now that's going to change going into this week here as we have a full week of trading and we're starting to see volume begin to come back a little bit. We see on the earnings, Tuesday we've got Apple, we have Yahoo this week, Netflix. Maybe Netflix is going to reveal some information because it's on the rise, a little bit on the takeover. So maybe their earnings have their subscribers stabilize, have people stop dropping off. Due to their pricing change. It's going to be interesting. On the economic front, we have the State of the Union, so that could have some big things happening on Friday, and for our forex traders, that might have something, 9 o'clock on Tuesday. But on Wednesday, we have the FOMC policy announcement. Certainly can affect both the global stock market and forex. And we have GDP and consumer sentiment on Friday, so we definitely have some big movers this week. Let's pull up the charts and take a look. As usual, we are going to start off with the daily chart of the S&P 500, and we'll zoom in here a little bit, and we see the big consolidation that we've been in since August of last year, just kind of up and down, up and down. Then we saw the 200 moving average become resistance as we consolidate into the end of the year. But then we began to see a little move higher. We finally, in the beginning of 2012, broke above the 200 moving average. And here in the last week, we have finally broken above 1300 to, as we said earlier, the highest level since the summer. So the question is, where do we go from here? As we look at our indicators, we can see all MACD, RSI, and stochastics are all overbought on the daily time frame. So again, there's nothing wrong with that. It's something you should be cautious of. But just because we're overbought doesn't mean we can't stay overbought, but we need a catalyst for that. And we do have some in the FOMC, in the GDP, and the consumer sentiment. They could help us stay overbought, but it is important to note that we are overbought in this move higher. Now, zooming out to the weekly, we'll get a better view of the ascending wedge we've been talking about. So again, 1300 has been the resistance that we've been watching. And then if you draw your little line up here, you can see your uptrend line that we have also. So we broke above that. Now we're looking to go back and test basically July of last year. So on our weekly indicators, we can see that stochastic is already overbought, while RSI and MACD have a little bit room to go. But overall, they are, again, getting closer to overbought. So our daily and weekly time frame are basically overbought. But when we zoom out to the monthly, we'll see that there's still a little more room to go. But of course, we need that catalyst. We'll zoom on in here. And we can see that January is starting off to be a great month. Our PPS indicators even saying that this is a potential buy as we are breaking above the last swing high. And here we can see stochastic also coinciding with our PPS indicator, saying that we can't go long. MACD is already up here, RSI is heading up there. So it's just, again, as we look for that dual time frame agreement, shorter time frame, basically overbought, longer time frame, monthly, heading to overbought. Maybe there's a little more room to go, but again, what's going to be our catalyst to keep us in that overbought status? Now, when we move over to the Nasdaq, there we go, and come on back here to the daily chart. We see a little bit of the same thing. We'll zoom in here. We see the consolidation. We see the break above. And now we're looking for that new move where we can go from where we are now. Again, on the daily time frame, we can see that we are overbought already. Coming out to the weekly, a little bit easier to see. We're looking at the highs from back in May, June, July-ish. It acted as resistance here in July. We put in that high in at May. So that is our next target if we can continue this move higher. And there is a little bit more room to go here. See, on the Nasdaq, there's a little bit more room to go here on the weekly. It's only the daily that's overbought. The monthly also starting to swing back up towards heading up. So what we're basically seeing is a great start to the month of January. Here in 2012, our earnings season has kicked off. Most of those earnings have been better than expected. Minus Google's really one big one that missed. And if we can continue to see that, keep in mind we also have Apple this week. If we can continue to have stronger earnings, if we have something good come out of the FOMC, we can see this week continue to push the market higher. And keep in mind, we're also starting to see that volume come back in the market as investors begin to take their positions for 2012. Let's see what our industry leaders are telling us about the market direction. Okay, we are going to go ahead and start off with the market leaders. We're going to start off here with Apple. So we're going to zoom on in here. And we can see this very nice move that Apple has made, and it's made a new high up here at 431. Pull back just a little bit here on Friday. It has earnings this week, so I would, you have to be a little wary because, of course, it does have earnings. But certainly, the overall chart of Apple is bullish. Amazon had been weak, but it's trying to pull itself out of this muck that it's been in. You can see this big move down that it's made, about $80. And then this past week allowed us to move back. But we're back in this range of about 180 up to about 196. So until we get out of there, I'm just going to say sideways right now for Amazon. Google. Well, of course, we talked about Google's big earnings that disappointed. And again, if I can't give you a better example of why you should draw your lines, this is it. Very nice, pulled back. Where did it pull back to? Our lines. Found support, stayed there, and then the earnings gap down. And where did it gap down and hold at one of our lines? So, again, just a nice little argument for why you should draw them. But since we'll have to see what's going to happen here from the earnings, will this 580 hold up? So I'm going to pass on Google. I would say pass. I'm not going to say up or down on it right now. Goldman-Sachs making a little run. It's been in a downturn forever. Broke above its downturn line. Broke above 100. Trying to make it on a run. Filling in this gap area right in here. So definitely coming into some resistance at the 110 price level, but certainly strong. So I'm gonna go sideways to up on Goldman Sachs. IBM, well, we talked about they had better than expected earnings, and so when IBM was in this big range here between 177 and 191, and then with the earnings, it was able to make its way up to out of this little muck here and gapped up. And now it's trying to make its way back up here. So we'll see what happens up here. Sideways up on IBM. Intel making new highs. You can see this range that we were watching and the support at 25. And then again, Intel had earnings and it's also able to make new highs. So we're in new skies. Certainly looks bullish. But I would say pass on it right now. Just you want to see what the reaction is going to be. Is it going to pull back to 25? But a very nice pullback to 25 and move from there. MasterCard. MasterCard had been a very nice chart here on a daily. We zoom in, and for the past several months, it's really got this sideways choppy action. And it's on the verge to go sideways to down. If we break this 337, you're going to have to start saying that this is a confirmed downtrend. Notice that it failed at the 50-moving average. So definitely sideways, almost sideways to down. Netflix, is it going to be bought out? Finally found some base at 65. Now it's made a run up here to 100. Notice that where it's at right here matches up with some of the wicks from over here. So it's probably going to find a little resistance here. Netflix does have earnings this week, so let's see what happens with those earnings. And finally, Priceline. We talked about this huge range, 440 up to 550. And in the last couple of days here, it's been able to finally get out of this muck and move up. So we'll see what happens up here as it starts to get up here to 540. Will the sellers come in and try to push it back down? Here we are looking at our market sentiment indicators to see how strong the market is moving. We know that it has an inverse relationship with the dollar. So here we are looking at the dollar. We can see the big move that's made up here. We'll zoom in. And we were watching 81.196. We did get a little break above that. But now it looks like the market wants to cycle a little bit more, consolidate a little bit. You can see that it wants to hold up here at 79.80ish. So as long as it hold up 80ish, we can definitely say sideways to up. If it breaks 80, if it breaks this 50-moving average, we still have 79 to watch, but we want to see it hold up here at 79.80ish. So sideways up on the dollar. So a strong dollar, moving a little bit sideways. We'll go over to gold. And we'll see that the gold is starting to make a little comeback here. As a strong dollar, gold starts being a little weak. But in this last month here, the month of January has been good for gold, and it's made a nice move up. But now, again, it's back in this range between 1600 and 1670-ish. Can it break that to make another run up to 1760? Not sure. What's going to be the catalyst? Well, we can get that maybe out of the FOMC policy statement coming up this week. If we're going to print some money, that's going to be good for gold. If we're not going to print money, that's going to be bad for gold. We'll finish off with crude oil. Man, gas back up to 345. But you can see overall, we're back cycling between 102 and 96 sideways. As we look at our education spotlight, we want to talk about some of the key characteristics of a successful trader. And we can see that successful traders specialize. You can't be a jack of all trades. You can't be the best option trader, the best forex trader, the best futures traders. There are certainly some trading strategies that work across the market, but you got to have at least one that this is your primary investment strategy that you're going to focus on, so that you can understand the nuances and again make adjustments as the market changes. A big one, again, we always talk about the psychology of trading, and successful traders take losses in stride. They understand it's the cost of doing business. It doesn't mean you're right. It doesn't mean you're wrong. It just means that the trade didn't work out. And therefore, you have to stay flexible and adjust as the market adjusts. And one way to avoid those big losses is to, look before you leap. You don't just trade just because a chart pattern. You have to find that confirmation. You need to put together a criteria, and as we talk about in our free video series, you need to combine things and frame the market into a trade, and not just take, oh, this one thing happened, I need to trade. Successful traders don't passively follow experts. This is why a lot of people lose. You know, buy, sell to people on TV, and there's nothing wrong with it. Obviously, I give advice, so there's nothing wrong with listening. But it's important to be financially literate and understand who you are as a trader so that you can discern whether what you're being told by these experts fits you. You don't trade just to trade. You trade because this trade works for you. And most importantly, successful traders avoid the blowout trade. I had a very good friend one time, and he used to just get up and walk away. You know, and sometimes when he came back, his money was still there. Sometimes it blew out. So successful traders avoid the blowout trade, live to trade another day. As always, we want to make sure you take the time to subscribe to our videos. Our new channels are up, and of course, we're putting out great instructional videos. So make sure you subscribe so you know what's going on. And as I just talked about, our 5-part video course, that's for free, really helps you frame the market and gives you some criteria that you can to put together to come up with a high probability trading setup. We hope this gives you a gauge to who we are as coaches and how we can help you one-on-one develop that personalized training plan. We do have a paid course which is the next level after the free course, and notice it's only $99. We're not trying to charge you $1,000. You get the same information, but at an affordable rate, because it's not the system, it's the mindset, and we want to make sure that you can work on your mindset, have money for that. For those of you who are looking for managed accounts, we have a great new resource for you. Managed Forex account, full transparency. It's your account. You're giving us authorization to trade an account on your behalf, and we develop a trading plan based upon your risk tolerance. And of course, if you're looking for charts, we have this work both on PCs and Macs. But in the end, as we say, it's okay to follow experts, it's okay to listen to experts, it's okay to have experts trade your account, but you have to have the trading mindset, the trading knowledge, the financial knowledge to make sure what people are telling you and what people are doing on your behalf is what's best for you. Thanks, guys, and I'll see you next time.